once we are done with the basic earnings per share, we can move now to diluent. So when you are doing diluent,
Yes.
the first step is all about to compute basic. So we are done with basic earnings per share. After basic earnings per share, now we determine the order of ranking the securities. Determine the order of ranking the securities. So that is now my step 2.
It's okay, you can continue.
So my step 2 is all about to determine the order of ranking the securities. The order of ranking the securities. So the order of ranking the securities, of which I said when you are doing a diluent, you always use potential securities. You always use potential securities. So which I have to write here potential securities. So potential securities. So potential securities, these are the securities which are likely or unlikely to be converted to ordinary shares. So we do that. So that, remember that if these securities, they are likely or unlikely to be converted, remember that right now debentures. Out of the debentures, you always pay interest. Interest is paid out of the debenture. So if you issue a debenture, interest is must be paid. But now what if you convert this security to ordinary shares? Will this interest be paid? No, the interest will not be paid.
Yes, pardon? No.
See, I've said, let's say the return, which is supposed to be paid out of the debenture which is issued, is interest. But now if we convert this debenture to ordinary shares, remember that the interest will not be paid.
Paid,
so
yes,
that's why your earnings will increase, because you will not pay that interest. Earnings, incremental earnings. So we'll have incremental earnings. So at the same time, since you are converting the security to ordinary shares, your ordinary shares will increase. Your ordinary shares will increase. So ordinary shares. So then, after this, you have two columns here. So the two columns is all about now you need to get earnings per incremental shares. Earnings per incremental shares. So you take your incremental earnings, you divide with incremental shares. Earnings per incremental shares. Earnings per incremental shares. So after that, you can do what we call ranking. You rank. You do ranking. So of which, now you identify the securities which are potential in this question. Let us identify the securities which are potential. So the securities which are potential here, we have the convertible preference. This is the first one. Then another thing, we go to note 6, we have stock options. Then note 7, we have 8% convertible debenture. And then note 8, we have this 6% debenture. Remember that it was convertible because it was converted. Out of the 5, 3 was converted to ordinary. So it's again convertible. So those are some of the potential we have. So we start with the 8% convertible preference. 8% convertible preference. You talk about the 8%. So the 8% convertible preference. Of with the 8% convertible preference, you talk about incremental earnings. You talk about the earnings. So remember that the earnings is concerning the security itself, which was an 8% security. So it was an 8% convertible preference share, of which out of that you multiply with 100 times 50. So you take 8% times the 100 times the 50. Remember, this is all about the interest which you are not supposed to pay. So that you have to apply your tax shield. That is why you are given down here. You can see you are given something concerning tax. So when the return from a security is interest on that security, when you are computing your earnings, you have to apply the tax shield. So the tax shield, we say 1 minus t. The tax shield is 1 minus t, of which, remember that t is 0.3 for now here, tax. So 1 minus 0.3 is 0.7. 0.7. So that is what you multiply here. So multiply 0.7. So that is the tax shield.
$280.
So you are getting 280. Oh, so this one was so we have messed on this because you know that this is not is the from preference shares. What is the return from preference?
8%.
I'm saying let's say now you are issued with preference shares. In return, what are you supposed to be paid? You are supposed to be paid interest or dividends.
Dividends.
So that is why when there's dividends, you don't apply 0.7. You apply on a scenario where you have interest.
Okay.
Things like debentures.
Okay, so it's 400?
Yes, that is 400. Okay. So remember that this security, the preference shares is convertible. So in return, they were supposed to pay dividends. But since it's convertible, will they pay those dividends?
No.
No, because now it's convertible to ordinary. So the dividends which were supposed to be paid, they will not be paid because the security has been converted.
Okay.
Yes, that is why we are determining the dividends they were supposed to pay. So that is now, since they will not pay, our earnings is increasing by 400.
Okay.
Then what about shares? So shares, now you check the way they did what? They converted to ordinary.
Okay.
In the last sentence of that note 1, they said in which way? They said all ordinary shares were fully paid and the preference shares were convertible into ordinary shares at the rate of 3 ordinary for every 2 pre.
Every 2.
So 3 for every 2. So 3 for every 2 preference. So 3 for every 2. So 3 over 2. It's 3 over, you can even test in order to know that you are correct. We say 3 over 3. Will I say 3 over 2? So 3 is equals to 2. What
3
about
is equals to 2. What of
100? What about 100? We have 100.
Yes, what about 100?
You say 100 times 3 over 2.
100 times 3 over 2.
It's over.
Okay, so it's 3 over 2.
3/2 times 100.
100.
So this one, remember, we have converted to ordinary.
Ordinary shares.
But now there was a share split. When did the share split occur?
1st of April.
Was it before this time? That is January. It was after, eh?
Yes, it was after.
So which means that these shares,
After.
these shares are coming before, eh?
Yes.
So which means that they were trading at a higher price. So we need to split them because they are before the split, eh? So they were at a higher price, eh?
Mm.
So say 3/2 times 100 times 2. You are getting 300, eh?
Yes, 150 times 2. I'm getting 300.
So 400 divided by 300, it's like 4 divided by 3. So that is earnings per incremental share.
1.3.
1.33.
Mm.
So we are done with that security. We move to the next one.
So the next one is a stock.
The next one was under note
6.
it was under note 6, eh? Stock options, eh?
Yes.
So you write there stock options. So you will find that under stock options, your earnings is always 0 because nobody will exercise. Your earnings will always be 0. Nobody will exercise. Nobody will exercise. That is what they said. Eh?
So
And
there's
that
no
is,
need to. So the moment I see stock options, there is no working to be done.
earnings is always 0.
Okay, on the earnings. 0.
Yes, because none of the options were exercised. Eh?
All right.
And in all of the questions I've done, that is the same thing which happens. What about shares? Eh? So for shares, remember the options they were given is which option? To purchase how many shares? So to purchase how many shares? So there is 200. The company offered 200,000 stock options on 1st June with an exercise price of 30 when the average market price was 40. So which means that they would purchase shares at a lower price, eh? Because the exercise price is 30 and the market price is 40.
30. Market price is 40.
So what you will say is a bonus element there, of which you will say this, eh? So you will say 200 times, remember this, it was 40 minus 30 over 40.
Okay.
All right. And you weigh. So when did this took place?
1st June 2014.
So from June to the end of the year?
6/12.
So from June is 6 months, eh?
Yes.
So that is 6/12. Not 7. From June.
Okay, 7.
So remember it's 1st June, eh? It's 7, eh?
7, yes.
It's supposed to be 7, eh? So you multiply 7 out of 12. So what are you getting there? So 40 minus 30. That is 10. 10 divided by 40 times 200 times 7/12. 29.17.
Yeah, there's a problem with my calculator, the decimal points. Eh? It's rounding off. I need to fix it.
29.17. Eh? So if you divide 0,
yes.
divide by 29.17, that is 0. Eh?
Yes, 0.
If you divide the 2, then we move on to the another security. So another security, that note 7. Eh? There was an 8%. There was an 8% debenture amounting to 4 million. The debenture were convertible into ordinary at that proportion, which is 60 ordinary for every 1,000. So remember, this is a debenture. The return, once you issue a debenture, the return from there, which we were supposed to pay, is interest or dividends?
Interest.
So under that, so we can continue on the other side here. So let's say security potential, you know that?
Yes.
Then we have earnings, incremental.
Yes.
And we have incremental shares. Then you talk about the last two columns. The last one is Durang. Then this one is all about earnings by incremental shares. Earnings by incremental shares. So what you do is all about now. The next, it was 8% bench or 6?
8%.
It was an 8% debate.
It's 8%.
So 8% debenture. So what about the earnings? So remember that it's all about 8% times the debenture itself. The debenture was not converted, so you record just once. So the debenture was 4 million debenture.
Yes.
Yes, you multiply with 4,000.
It's
so you multiply with 4,000, then you multiply with 0.7. Since the return from this one is an interest, you have to apply the tax shield. So what are you getting there? $224.
Yes.
Shares. So shares, even this, in which way were they converting that proportion? This proportion was 60 ordinary for every
1,000.
So say 60 ordinary is equals to 1,000 of the debenture. What about the further? What about the 4,000? So we say 4,000 times 60. 4,000 times 60. Over 1,000.
240. Yes, 240.
And is this one coming after the split or before?
July. After.
Oh, after. So you don't have to split. That one was okay. So we are getting 240.
Yes.
So divide 224 divided by 240.
0.9.
0.93, eh?
Yes.
So the last security was the last one, not not 8, the 6%, which was issued the 5 million, which was issued 2010. In which proportion were they converting? 60 ordinary, fully paid
for every 1,000.
So, but now remember, in 2013, none was converted, but in 2014, 3 million converted.
Yes.
So we need to consider first. We have to consider first what was converted. Then after that, we consider the unconverted.
Okay.
6% debenture. So the convertible, you know, it's convertible. Once I say 6% debenture, it's convertible. So what I will do, I will first say 3 million. So it was 6% times 3,000 for up to the conversion date. Because I'm first considering the converted one. It was converted when?
Yes.
The 3 million in 2014, it occurred, the conversion occurred when? October.
Yes, 1st of October 2014.
So from January to the last to the 1st October, so which means that it's the last date of September. Those are how many months? 9, eh?
Yeah.
So
9.
you multiply with 9 over 12, then you multiply tax shield of 0.7, eh?
Yes.
Then your answer you add with 6% times 2, eh?
Yes.
Where is 2 coming from?
It's the difference between the 5 million and the 3 million.
So I have to multiply with 12 out of 12. So you don't have to consider it 3 months, but the remaining 1, 2 was there from the start. Eh?
Yes.
Yes. Then you multiply with again 0.7. So what are you getting there?
The first one is 94.5.
I need the total.
Oh, the total, just hold on.
In my calculator, I'm getting the total of the two is 178.5.
Yes, I am there now. Yes, 178.5.
So then you do the same. This is what about shares now? In which way were they converting? The proportion. $60 for every 1,000. Eh?
Yeah, 60 for every 1,000.
So we first consider the 3,000. So we say 3,000. So we consider first the 3,000 and 2,000. So I would say 3,000 times 60 over 1,000 times, it was up to the conversion date. That is 9 over 12. And remember, you have to apply 2 over 1. Why am I applying 2 over 1?
The split.
Because now the security, the total 5 million was issued in 2010, which is before the split. Eh?
Mm-hmm.
So that is why we need to split this one. It was before. Eh?
Okay.
So the remaining one is 2,000 times 60 over 1,000 times.
Okay, I'm on the second part. Just a moment.
So you do what? So I think you see you understand everything we are doing. Eh?
Yeah, not bad. I have understood this one. 496.
The value is
496.
the total is supposed to be 5 something 510.
510.
If you do well. You can do even separate, then you give me,
Yes,
you add. So that is fine. Eh? So then
I'm
after
saying on the first part, I have 135. And then the other one, I have 36.
You are not getting 510.
I'm not getting 510. But there is a bad setting on my calculator. I need to look at it. Huh?
Remember, the first one is supposed to be 270, because if I take 3,000 times 60 divided by 1,000, 180 times 9 over 12, that is 135 times 2. The first one is 270. Then the next one, if I take 2,000 times 60 divided by 1,000 times 2, if I take 2, I'm saying 2,000.
Okay. I have seen where I wrote at a 3 instead of a 2 there on the shelf.
It's fine.
I had 3 and 1. Okay, that's why it's giving me wrong values. Now I have 510.
So you divide 178 divided by 178.5 divided by 510. I think you are getting 0.35. So that is how we are getting 0.35. By taking 178.5, you divide the 510. Eh?
Yes.
So we rank from the wrist. Which is the wrist? The one which has a wrist potential being converted to ordinary. Stock options, it was 0, eh?
Yes, it's the stock options.
The number 2?
The 0.35. The shares.
Then number 3, this one, eh?
0.93.
Then the last one is this, eh?
Yes.
Then after you have ranked, now you carry out your diluted, eh? So the last step is now to do the diluted. So we continue. So the last step is all about now diluted. We do the diluted earnings per share. So diluted now, you draw 3 steps. So you talk about the security. You draw the 3 columns, not 3 steps. So 3 columns. So security, we have earnings. And we have the shares. Eh? Then after the shares, the last column is now the diluted earnings per share. The diluted earnings per share. So you start from basic. You say from basic earnings per share. So from your basic, remember that these diluted of ours, we were required to do for 2014. Eh?
Yes.
So from basic, so you pick your basic EPS. So you pick your basic EPS 2014. Earnings was? Earnings is the same as the powers. Eh? For 2014 was? This one, eh?
Where is that?
Sorry?
No, I am trying to remember.
That is what I have just displayed. Eh?
Okay.
So you can see the earnings was 1,400. The one was 1,290. This, eh?
Yes, okay.
But in order to get the 14, remember that we use the total reported profit after tax. Eh? But I said under diluted, you use the profit only. Use the profit only from continuing. So when we arrived at 14, remember we took 18, we subtracted preference dividends of 400. When we calculated this, when we calculated these earnings. So this one 18 was including 250 from discontinued. And I said when we are doing diluted earnings per share. So for the diluted earnings per share, remember it doesn't include the profit from discontinued operations. It only includes the profit from continuing. So we have to raise the 250 from the 1400 we got as our pause, because in order to get that 1400, we used the total amount from both continuing and discontinued. So that is why I'm subtracting 250. So that is the answer is that is 1150.
1150.
So I say this one was 1290. The one was. So if you take 1150 divided by 1290, we get 0 point. Then you pick now the security which we ranked as the first one. I remember it was stock options. With the earnings was 0. Then the shares were
29.17.
29.17. So you add, you get 1150. 1290 plus 1290 plus 29.17.
1319.17.
1150 divided by answer 0.87. So you divide this and this, earnings and shares. Then the second security was concerning this 6%.
What?
The second one.
0.35.
What are you getting 0.35?
No, I'm saying that's the next security. It's the shares. Wow, am I lost? I have a question.
Mm-hmm.
Could you kindly repeat what we are doing now?
So
are
we are
ranking
doing
again?
Sorry?
No, just repeat so that I get to follow you.
So remember that now we are doing the last step.
Yes.
This is a new table. I have drawn the first column is security earnings shares, then the last end now is diluted earnings per share. So this now we need to get now the diluted. We are computing the diluted earnings per share using the ranks in step 2.
Okay.
Of which I said,
so the question is, the guidance is we start from the least ranking security. That's where I'm lost, because after the stock options, now we move to the
second.
The one which is the second one. Okay.
Which was?
All right. That's where
we start from the security. We always start from the basic earnings per share. After basic, we move to the security, which has a risk potential of being converted to ordinary shares.
Okay.
As we continue. So the second one was 6% debenture.
Yeah, 6% debenture.
Convertible. It's convertible. It's okay. So that is, the earnings is?
It was 510.
Shares is the one.
Okay, 178.
So you add the two. So obviously it will increase your earnings, and at the same shares will increase. So 1150 plus 178.5, getting 1328.5.
1328.5.
Then plus 510. That is this one is 1829.17.
Yeah.
So 1328.5 divided by answer. So 0.7. So you divide this and this. Earnings divided by the shares.
Okay.
So 0.73.
Yes.
So after that, you move to the third one. Third one was this. 8%. This is the third. The 8% debenture. Earnings is 224. Then this one was 240. So this is the 8% debenture. So 1328.5 plus 224. I think you are getting, if you add it and you divide 1552.5 divided by 2060.17, you are getting 0.75.
5 is something.
Then the last one is this, 8% convertible preference. So the 400 and the 300. So this one was 8% preference. So the convertible one. So I'm writing just in short, you know it's convertible. So this one will be 1952.5 and this one will be 2369.17. So you divide the two. Zero 0.81, not 18, 0.81.
Yes. I have that.
You have that,
That's the last one.
And that is the last one. So that we can conclude and say that diluted earnings per share. So you pick the list. So the list is
0.73
per share. So that is the diluted earnings per share, DPS. So the two, remember that here, this trend was decreasing 0.89, 0.87, 0.73. Then it started increasing from this point.
Yes.
So which means that the two securities, these ones, NB, 8% debenture, the convertible, and 8% preference. So both are convertible. We call them are antidilutive. We call them antidilutive securities. So they are antidilutive securities. So the two are antidilutive. So I think that is the end of this question, and that is the end of the class for today. So in our next class, I will do 2 more questions, which will cover share split and bonus. So already, because we have already covered this question, which has an element of right issue, and it has an element of share spread.
Share spreads. Okay.
So that is the end of the session today. So I will be doing more of the questions concerning earnings per share, consolidation, reconstruction, or the topics in advanced financial reporting. So the only thing I can be able to request from you, just never after you have watched this video, you have gained. This is a free sessions I'm giving you. Just reward me with a subscription. So never forget to press the button down there. You can see subscribe. So subscribe and share these videos so that this channel can be able to reach many guys as possible, the students who are doing CPA. Remember that we are in a COVID period where we are under lockdown in Nairobi. So make other students to gain and at the same time, make this channel to grow. So I appreciate for your time. Thank you. So if you want to reach me, maybe for more sessions concerning the same, you can be able to call me at 0728 760 546. That is my personal contact. At the same time, you can use my social platforms. That is Edwin Ochoy in Facebook. At the same time, Edwin Ochoy in any other social platform which is available, LinkedIn, Instagram. So I'm using my official names. So that is good for today.